We kick off by taking a look at Nedbank. The company reported a 28.8% surge in headline earnings for 2.8 billion rand for the first half of this year, and underlying the bank's success to diversify income streams and grow both interest and non-interest revenue, the bank declared an interim dividend of 265 cents per share, an increase of 25% compared with the same period last year.
Nedbank market cap 71 billion, price earnings ratio 11.9 and dividend yield 3.7. Liston, let's come to you in Cape Town first. Broadly, a really good set of numbers, and that non-interest revenue, they're really trumpeting at 16%. I think, that they're talking about there the parts that they charge for bounce checks and the like. A good number, good set of results.
Well, I think what we've got to do is we've got to look at the industry first, and partly in a global context, but also looking at South Africa over the last couple of years. And, without doubt, people were finding difficulty in making payments, and we had also the overflow from the National Credit Act coming through, reducing lending. There were all kinds of other requirements in terms of capital coming through from the global financial crisis. So, one way or the other, the banks had it a fairly tough time, and I think if you analyse it as well, that there's not an awful lot of extra lending taking place in this set of results, and I think that needs to be looked at. But then we have to say, yes, people are not going into default as much as they did previously. Therefore, we're not got the same kind of write-downs, and hey presto, the bottom line says 28.8. Now, again, if we look at this thing, with a little bit more detail, we'll see some of the non-28.8s, and then we have to say, well, how did this number kind of appear right at the end? And, what I would encourage the viewers to do, is to have a look at the results. They are on SENS, and they're relatively easy to get. But what they show you is, the half year to June for this year and last year, but then they show you what was happening in December last year as well. A little bit of subtraction, and you can see what happened in the intervening 6 months for the second half of last year. And sometimes that is actually quite useful, because it does tend to draw the eye to something which says, gee, that's a major change, but already it had happened by year end, or hey, it only happened in the first half of this year. So I think I would certainly encourage people to do that. So again, if I just look down slightly for a moment, the interest and similar income was actually down, but what was also down was the interest expense. Now again, we know that we've had declining interest rates, and so this should be no surprise, but it's the scissor movement on that combination. So where last year your interest and similar items was 21 and your interest expense was 14, leaving you with 7.7, this time around your interest and similar income was down to 20, but your interest expense and similar charges was 11.8, and so hey presto, your net interest income went up to 8.3 from 7.7. Now, was that brilliant management? Was that by good luck? Was that a function of the environment? It really, to say, gee whiz, look, finally we're joining the rest of the banks, as there was some commentary, related to it, because people had been saying that their net interest income had been lagging. I'm not too sure about that sentence. Let me stop there and let others participate, but I've got some more to say lower down.
Fantastic. Thank you so much, Liston. That's actually great analysis there. Paulo, have you noticed that scissor movement that Liston was alluding to? And also quite fascinating that the company has actually said that it's starting to focus on increasing the money it makes on transactions to offset the weaker credit demand growth, which we know is completely evident in the whole of the country.
Yeah, Advance's growth was, well, there wasn't really any, but there was inside the retail side of that business, which is quite good news. I think the real disappointment on the Nedbank side is Nedbank Capital, of course. That just didn't pull through. Everything else on all the other divisions
Nedbank Capital actually went backwards. Period on period.
That's right, yeah. And every other division really went ahead. It's quite important that they grow that non-interest revenue. And it's not only from transactional banking activities, also in their wealth side and their other contributions from other services that they provide. So I thought it was a reasonably good drive on that front. Bear in mind also the expenses were ticking up as well, but not to the same extent that their non-interest revenue was growing.
Not too long ago we were talking about the retail side of the business that needs the most significant focus. Do you think now the big focus should be coming through on Nedbank Capital, which you alluded to obviously went backwards?
I think they're still going to have a further to run on their retail side. If you go through the results, I think they have made some achievement there, but I think there's still more in that side. Of course, Nedbank has been traditionally quite strong in the corporate space, and that held up as well. But if you look at Advances, they're pretty much showing pressure on that side. I think all the banks are going to come out and show you pressure on the advances side. The reality is the drive for provisioning has changed and so forth, so there's a natural flow of earnings coming through. But on the ground, I think Nedbank has made progress on that retail side. No doubt, I think there's two avenues in Nedbank that require some attention, and one would be Nedbank Capital, because it's quite difficult to understand exactly what's gone down there. And the next thing is, well, how they're going to carry out their expansion strategy ultimately. So you can correct some of the past, and that's what's driving earnings, but eventually you're going to have to go to your next level, and it's not like advances are coming through right now. So where and how do they expand? What is their approach into Africa? First Rand, Standard Bank made it quite clear. Nedbank's case, maybe not quite as clear.
I mean, I wanted to touch on the expansion, and it is. I mean, non-SA is 9.1%, which is very, very small. They're there. They've got the branch network, but there's always a sense that they've been lagging the other banks. You've mentioned Standard Bank, who are big in Africa. You mentioned First National and the like. They're just not quite there yet. They're not growing into that space significantly.
Yeah, so if you take First National, for example, they will have a retail presence in, let's take Botswana, for example, which is meaningful. They may also, Standard Bank, for example, have corporate presence quite strong in other parts of Africa. Nedbank's got a retail presence, but it doesn't seem to be in a first or second position in those markets. Yeah.
Listen, I'd like to get your sense with regards to what is happening globally in the banking space. HSBC out with good numbers, first half profit, better than most had expected, but also subsequently announced that 30,000 jobs are going to be cut. We know that HSBC and, of course, Nedbank, a deal was imminent at one stage. That has now been put to bed. Do you think that Nedbank in some way or other is trying to beef up its balance sheet for a possible takeover down the line, and also just the implications, the synergies that could have been between HSBC and Nedbank?
Well, again, as you may recall, I said at the time I didn't think HSBC was the logical suitor. I still think it's Standard Chartered, because they are big in Africa and Nedbank isn't. And it would make a lot of sense for those two to get together, and then, hey presto, you have the Nedbank into Africa done in one go. So that's that one. But just talking about HSBC, if you recall, just before the global financial crisis, they went and bought and I've forgotten which bank it was in the United States, which didn't do them any favors in the global financial crisis. And I'm fully expecting that most of those 13,000 are going to be in the United States. But also bear in mind that quite a few other banks are now losing staff, and it's largely because of the blurring in between investment banks and banking. Yeah. And we know the drive is towards reducing banks and investment banking interchange, and particularly it relates to things like derivatives. Now, I just want to bring that back to Nedbank, because it is one of the interesting items. I've just moved down to the consolidated statement of the financial position, and exactly as Paulo was saying, loans and advances this time last year were 458 million. At year end, they were 469 million, and then are now 466 million. So loans and advances have actually declined over the last 6 months. Now, I think that is interesting, if not noteworthy. But the one that really jumps out at you is the words called derivative financial instruments. Now, whatever they are, and I suspect that they are very big in Nedbank Capital, to be quite honest. Yeah. Because that's where I would imagine any kind of derivative action is taking place. You'll find that a year ago they were at 13 billion. They were at 14 not billion. They were at 13 last year, and then they were at 15 at December, and they're now down to 8. So suddenly there's been a stop that kind of approach to the derivative financial position. Yeah. Now, that may be a function of the markets, or it may simply be a part of this greater requirement for capital to be held against derivative positions. Yeah. And perhaps clearer reporting in terms of the way they are accounted for. And again, if you think I'm joking on that one, if you see how derivatives are reported in terms of the new Reg 28, I still think there's an error there, because people consider the margin that you have paid for your derivative position to be a cash item in your reporting. Okay, I absolutely don't believe it is a cash item.
Listen,
it's a part payment
hot or not, Liston?
Not hot.
I
mean, we knew that we're going to be 20-something up. They are 20-something up. I can't see where the next 20-something is coming from. Not hot for me.
Not hot, okay. For you,
yeah, Paulo. Not hot. I think this is a natural run of earnings of all the banks. I think this time next year is the challenge, if they can sustain this anywhere close to this kind of earnings growth.
Okay. Simon.
I'm going with the other two gents, and what also add to it is that I think there's an old mutual premium in that they're on the shopping block, so they may be trading a little bit higher because everyone's expecting an offer to come through at some point.
Okay, so not hot. Let's delve into the next stock. We now turn our attention to diversified holdings group, Hosken Consolidated Investments.
We've got Hosken's market cap 11.3 billion, price earnings 15.2, dividend yield 0.88. Pollux, come to you first. Not much of a dividend pay there. They got some great assets. ETV, which they got 63% of, Tesoro Sun. They got KWV. They've also got, Golden Arrow Bus Services. And I, to be honest, saw that and thought, now there is a stock you don't want to touch. You dig into it. Golden Arrow, not bad.
Yeah, absolutely. The bus service in Cape Town essentially has been a very strong business for HCI. And is probably their third largest contributor to earnings, so nothing to sniff at. I think the whole business of HCR, though, has shown that management team can take on assets and actually turn them around, and that's why I think that KWV's probably ended up in some good hands, actually.
Okay, so Paulo, what do you make of the diversity within HCI? You've got clothing and textile, media, broadcast and transport, vehicle, mining. Of course, clothing and textile makes a very large chunk, 38%, and we know what's happening in the textile industry.
It's a little bit like a Remgro, I can say.
Yeah.
Sure, it's got a whole lot of assets, but they've got quite a good track record behind those assets. It's dominated, of course, by these few very large assets, and Citadel is one of them. I think it's probably worth mentioning, though, that the loss-making activities of Citadel are out the business, and it's profitable at the moment. Not as profitable as the ETVs and so forth, the gaming operations, but nonetheless some very strong property interests in there. And they've settled that down, actually. I wouldn't write it off.
Liston, coming to you in Cape Town, as Paulo said, good management. In a holding company, which is essentially what this is, there are two things you want to focus on. One is the assets. They've got some good assets there. The second is that management, and the management have largely proved themselves.
Well, yeah, I'm not too sure that it's a holding company. I see it much more as a private equity company which has large interests in gaming and media. The clothing also ran, in my opinion. It has all kinds of things. And yes, we can talk about Golden Arrow. And I just want to draw attention to a comment in the last set of results. Golden Arrow Bus Company has been forced to apply for relief in order to protect the business arriving from the City of Cape Town purporting to allocate bus operator licenses to various others to operate the buses. It seems that has been sorted out. It says that we have settled this litigation on the basis of compromise in exchange for written undertakings by the city to honour our contractual exclusivity going forward. What all that's about, I would love to know, and whether it's going to impact profitability is a matter of interest. Now, I think, what I really think, if we're saying anything here, is with the Gold Reef, we're now talking about, the largest casino operator in South Africa. And if you can get that for 11 billion and a whole lot of other bits and pieces going with it, and certainly, when we look along the line, they talk about net gaming revenue, and that's not a small number, and I think that can grow and become much more sizable. Bear in mind the accounts are also going to change because, with this result, they won't be consolidating anymore because they only own 41% of the merged entity. So I just think, when we look at this thing, we say, where does the money really come from? I'm saying, honestly, it's coming from gaming and media.
Okay, gaming and media. Paulo, you mentioned that we shouldn't write off the Citadel component. We know textiles and clothing, very, very competitive because of the imports weaknesses which have been put forward by Simon Brown. Golden Arrow Bus Services, we know that the bus scenario that is playing out in the country could be quite volatile given the fact that we've got Ria Vaya, the bus system that is currently being implemented by government. And then they're also burning through cash, sitting at 308 million rand. Your view on those three weaknesses. Do you think they're weaknesses? Do you think that they can be overcome?
No, I think they can be overcome, actually. The bus business is one of subsidies and so forth, but if you've got the buses, ultimately you will be gaining those contracts, and they've got a long history in that space. Yeah. So I think they've managed it quite well. The casino side, the only thing that maybe is a bit worrisome is the hotel room side. That's maybe overtraded at the moment, so one might have a little bit of caution on that. And the business is not leveraged in any way of a meanful extent, can go and make further acquisitions.
It has a very strong balance sheet.
Very strong balance sheet.
And they did aggressive write-off of goodwill, set of results beforehand, which I always like to see.
Yeah, so they're in a position where they can make further acquisitions. I think one backs diversification and management ability. I think, as was said earlier, it's not really a holding company. They're quite active in their underlying investments. And you look at something like ETV. I mean, initially there were some concerns that something like that would never really get off the ground, but it has very successfully.
Would you say that it's more like a private equity company? And if it is a private equity company, shouldn't it be getting a company into a position where it eventually sells? Yes, right?
Well, yeah, I guess you need to ask that management. But but ultimately, some of those assets, I'm not sure you'd really want to get rid of Sogo Sun or
So,
ETV, some nice cash cows there.
okay, hot or not for you?
very hot, yes.
Very hot. Would you be buying then
Absolutely.
and buy and hold over the long term?
Yeah, I think there's a long-term story in here.
Even right now, given the fact that equity markets for the month to date, by the way, is down 1.5%. No, in fact, down 2%, and for the year to date, down 1.5%.
Yeah, so it's
Would
been
you
a
be
flat market for the year, but I think I would, yeah.
Yeah, hot. Okay, fantastic. And for you, Liston, hot or not? HCI?
No. Your revenue line is only around about 9 or 10 billion, and your market cap is 11. There's not an awful lot of benefit for me in terms of that safety net. They also mentioned, that they've had to send management in to come and help rescue KWB because it wasn't performing in line. So, they've got a couple of items that I think will take quite a lot of management time. I do like the Gold Reef side of it. I think that's certainly, put a bigger stamp on what we're buying here, but I wouldn't rush for it right now. Thanks.
Okay, so not hot from Liston. And for you, Simon, hot or not? One hot and one not. And you?
I'm going to go hot. I like it. The dividend yield bothers me, and the price earnings bother me.
Dividend yield
The
man, it's
dividend at 0.88, I'm not being paid to hold it, and the price earnings of 15. But I like the assets. I like Tesoro Sun, I like ETV, I like KWV. Cerdal, I could live without that, but I suppose I'm making money.
You only like CNBC.
I like CNBC. I don't watch ETV, but it's good for revenue. And a very strong balance sheet. I'm going to give it a hot.
Fantastic. We are going to a very short break.